Welcome. It's 27th of July today. We're going to be looking at some trades that we took. We took 4 trades, 2 trade ideas, all of them being on gold. GJ was just very hard to trade, a lot of ranging on the pair, whereas gold had a bit more movement. We had a bit of data, US data. We also had the euro interest rate decision come out as well, which came out as expected. So they didn't have too much market impact. But in terms of the US data, they had a bit more impact because it came out actually more positive than expected, meaning dollar sell or dollar strength and gold sells. So if we look at the screen here, we can see the market had a lot of data to react on today. We had the durable goods, which is what the data came out as positive, meaning, like I said before, gold sells, dollar strength. We can see 4.7 better than 2%. This was revised up from 1.7, meaning the impact was lessened, but overall the market took this as a lot more positive than negative, and we'll show you the charts to back that. We also had jobless claims come out better than expected, so all of these are actually indicating a more solid US economy, and obviously, like I keep mentioning, dollar strength, gold sells. So if we have a look at the charts now, we can clearly see one of my trades, most of the trades, I missed the sales, right? The dollar sales, or the gold sales from the dollar strength, I missed. I couldn't find a way to enter without being impulsive. I was waiting for pullbacks, I was waiting for double or single taps of key levels, and we never got that to an extent that I wanted. Overall, I should have been entering impulsively with a lot of volume. You can tell if you hop back to the 1 hour, you can clearly see massive 1 hour candles. That's 200 pip candle there alone, and overall we had over a 350 pip move today, right? And so not taking advantage of these sales was poor on my behalf, especially after understanding and recognizing that we had data that supported these sells. So it was quite frustrating from my point of view, and my patience got too much to the point where I was trying to look for the wrong entries in high volume times because I'm so used to lower volume and lower volatility at the moment. If we look at the trades, it's going to be a bit of a mixed match. So my whole idea was, right, if we keep breaking down, we keep respecting these lows, then you can clearly see, if we keep respecting these highs that are created, so the lower highs, we're going to keep coming down. So we came down, created lower low, lower high, lower low again, and then lower high again. And then I entered initially on this thinking, right, it's going to react at this 1 minute or this key level of 90.45, but also this 1 minute support and continue with this higher volume. We didn't get that. We got a push up, risky, I understand, because of all this push previously. So all the volume's already sort of been exhausted, right? It already pushed down 350 pips by this point. So I understand that's why that's loss. Then we've got another trade where I've actually entered on a double bottom from the looks of it, looking back at it. And my whole point was, right, I'm going to enter impulsively, break at this. Impulsively too late. Like I said, we're out of volume in terms of sales. The sellers are exhausted. How do we know this? Well, if we look here, we can see a double bottom form, but also the 1 minute candles are slowing down in terms of size. We can also see a lot of ranging forming, side to side action compared to this price action where we're creating clear downside with stronger bearish candles and weaker bullish candles. We stopped getting that after around 240, after NYSE open. So you can clearly see that, and that's why I was like, right, that trade idea of sales won't work. What's going to happen and what I see is exhaustion, and therefore we're going to expect buys to come into effect to at least retest some of these levels that we've just pushed through to balance out that liquidity or balance out the order flow, as the markets always do. So most of the times when moves happen impulsively with data or with news, most of the time you'll see a lot of corrections happen, roughly 50%, right? So that was my whole bias going into this trade idea and these 2 trades. So once we had that double bottom that I mentioned, I was like, right, we can see that double bottom. Should I have swap biases? I think you can when you understand what's going on, and that, from my point of view, I think I did. However, stop loss was too tight, so I actually got stopped out, yet the market actually did continue going up a bit. So without that tight stop loss, I would have been fine with that trade idea, but better entries as well should have been down here, right? So if you're going for a double bottom, it should have been down here. And if you're going for a triple bottom, it should have been here, right? With your stop loss well out of the way, very secure, and you would have seen a lot of consolidation, but at least we do continue going up after creating that, like I said, double, triple bottom. my last entry was like, right, this is my 4th entry, 3 losses in a row, but it's the second trade out of this, just a second entry. So all I'm doing is I saw the triple bottom form and I was like, right, there's the triple bottom. Once we get a break of this key level, a retest, I'm going to enter on the retest candle, which I did. Stop loss well below, as I've learned from a mistake, well below all these counts to the left. Therefore, if this stop loss gets hit, it's invalidating the trade. So you can see we nearly hit the stop loss, but like I said, if this zone is respected on the 1 minute and on the lower time frames, we're going to continue going up, or at least retest other levels that we previously had. So you can see I'm going to mark it here quickly on the 1 minute. This area here with the box. This magic box caused a lot of issues just now, recently, actually about an hour ago. Saw price react there, failed to break, retest, failed to break, and that's where we should have closed. I've just trailed my stop loss below these wicks here and went out in just above break even, about 5-10 pips in profit. So overall, average day, poor entries, and management was okay. I think understanding and where I can enter in high volume times and remembering that you can enter impulsively is where you'll gain more, obviously more profits and lose less capital, right? So that was unfortunately today. We have just seen a sneaky at 6 o'clock, a massive push down on GJ. This is to do with, I understand, Ueda, the Bank of Japan chairman, coming out and saying some more remarks about loosening the policy of JPY. This is given short-term strength there. You can see at 6 o'clock, very random time. And we also recognize that tomorrow we do have, or tonight I should say, we do have the interest rate decision for the Bank of Japan to come out. So overall, like I said, poor day for me personally, but a lot of trade ideas, not on GJ, but on gold. You could have caught those sales easily if you understood and recognized the data. Going back to tomorrow, same again, we've got more data coming out, but I'm going to be taking it slower, understand, right, ask myself, should I be entering here, and try and talk myself out of the trade while understanding what data is coming out. And hopefully that will, I shouldn't say hopefully, but I understand that will definitely put me in a better position to capitalize on moves within the market and give me that higher probability strike rate, that is. So overall, like I said, decent day for others, poor for me. And just to show you the market terminal, we have that there showing the losses. So we've got 3 losses there, we've got the 1 break even / win there.